Good morning. I'm Noah Mercer, and you're tuned into the FinMonkeys Morning Brief. Let's get you up to speed on what's moving the markets today. First up, the Federal Reserve's new chair is stepping into the role, and investors are hanging on every word for clues about inflation and policy direction. At the same time, Treasury yields are climbing, a sign the bond market thinks the Fed may have to tighten sooner rather than later. And those higher yields are already nudging the major indexes lower, pulling money out of equities and adding a little extra volatility to the mix. So, what's really framing the day? It's the combination of the Fed transition and the bond market's response. The new chair's comments are being parsed for any hint of a shift in policy, while the rising Treasury yield suggests the market is bracing for tighter money. That dynamic is already forcing investors to reassess risk, especially as the higher yields start to bite into equity valuations. In short, the bond-equity relationship is the story we need to watch. A rise in yields tends to pull, but there's a bright spot on the horizon. RBC's senior executive highlighted that strong earnings from AI-focused companies could keep the equity rally alive, even as rate concerns loom. When a sector delivers solid results, it can act as a buffer against broader macro headwinds, giving investors a reason to stay the course. So, while the bond market keeps the pressure on, the AI earnings story offers a hopeful counterbalance that could help sustain market momentum into the next session. That's the FinMonkeys Morning Brief for today. The next thing to watch is Fed statements and AI company results. Thanks for listening to FinMonkeys. We'll be back tomorrow with the next market setup.